Hello, trading is closed on the 22nd of January 2015. I'm Jeffrey Tennant. Let's start out by looking at my last call. I'm going to invoke the rule that says when I'm looking in one direction and it's the wrong direction, the market almost always makes it obvious by having a strong gap in the other direction, which is what happened today. I had an optional target of 2021.80. Optional targets don't have to print, and I said if this one didn't print today, I would forget about it, which we will. I said there was a good chance, but not a requirement for a gap down. Obviously, that didn't happen. And I said this was a very negative formation unless we had a gap over this high, which is what we had. Well, optional targets are kind of equivocal, but there isn't any equivocation in what the mejt system is predicting for tomorrow. Early in the day, the system gave a buy. The S means it's a strong buy, but it also said that the rally over the target is a false move, and it's calling for a big retracement to 2036.05, most likely by Monday morning. In the afternoon, the signal said ultimately lower prices would print and ultimately higher prices would print. Well, obviously the higher prices printed. A signal like that doesn't give us a lot of help when it prints, but it sure gives us a lot of help now. It says there's an ultimate target of 2043.97. Remember, there are about 3 failures of ultimate targets in the last 12 and a half years, and there were no failures last year. The system also said that this whole rally is a false move, and it calls for a return to 2047.73, most likely tomorrow. Well, it's always hard to step in front of a racing train like this. Let's review the overall call and see if I'm just plain nuts when I say this is a market high. This is the percentage of stocks who have positive chart formations. As the market is getting close to its all-time high, this is not moving at all. In fact, it is very low. I had previously called for the possible end of the whole bull market right here in July, the first week in July. As far as market breadth was concerned, that was the high on this weekly chart. We've made steadily lower highs since then, and I think we're going to be making lower lows. This is not typically the way the market stages a big rally. It's also somewhat negative that unless we have a big rally to a new high within the next week, we will have a lower high in January than we had in December, since new money tends to come into the market in January. That in the past has had very negative implications. It is possible we could go a little bit higher because we are 1 to 2 bars away from getting to mark sell signals on the 65-minute chart. Speaking of DeMark, his TD lines system doesn't always work when the points are this close, but the rules say this break is not sustainable and will retrace to the line. I'm going to have the same caveat. If we gap up strongly tomorrow, I'm all wet. The call could fail. But I think it's important to say that if this is the high, and that's wave 1, it is now possible to count an ABC, and we could have a wave 3 down to the lower end of the Andrews pitchfork, which is about 1900 as we speak. If I'm correct about this, we should not hit a new market high, which is about 30 handles away. So the call for tomorrow from the mejt system is we have much lower targets, including an ultimate signal. And I'm going to stick with that, even though he might go a little bit higher first. I'm looking for a pretty big drop to start pretty soon, and that's today's call.